Hey, what's going on, guys? It's Henry. Welcome back to another video. Today, I want to take a look at this software. I want to look through a few different plays here. Then I'm going to go into my Robinhood portfolio, show you what these plays look like, the potential reward. I also want to do some technical analysis. Basically, I'm just curious if this software is going to give me some good plays and, how it actually works. And this software was created by my buddy who I used to work with. He's an engineer and he also worked in fintech. So I trust him with this software. You can check out OptionFi in the description. It's basically an artificial intelligence algorithm that picks option strikes for you, and he actually focuses on weekly strategies like me, so pretty good stuff. All right, so the first stock is Google. The recommendation here is a call credit spread on Google, and looks like it is a 2310, 2315. So let's take a look at Google's technical analysis. This does make sense to me. I am a big fan of call credit spreads right now, just because the market is in bear territory, and even before the market is opening, you can see that the futures are basically negative. Not surprised, my portfolio has a ton of hedges. In fact, I have hedges on Apple, on Facebook, and on Nvidia. So yeah, I'm trying to protect myself as much as possible, but let's check out this Google play. I want to see if it makes sense or not. So let me go back. It is a 2310, 2315. Pretty good, pretty decent. So the moving average is 2368. Let me turn on indicators. Let me go to Bollinger Band. Again, the Bollinger Band is just giving me standard deviation of how far a stock is likely to go. Two standard deviations is like 95% or 96%. So the top of the Bollinger Band here is 2435. So not bad, a little bit aggressive here to go for the 2310. Duration is on 6.3. So let's now check out this play. Let's see how much percent return this would be and if I agree with this play. I do like call credit spreads on Google, and it is going down 0.87% after market. I actually ended up selling Google in my Discord community. I sold 200 shares at 23.22. Really glad I did that. I was unsure if I should do this, but I basically wanted to reduce a lot of my exposure to tech stocks during this sell-off. So 23.22 I sold, and now we're at 2100. What a big fall. I mean, over the past month, this stock is down 12.66%. Pretty crazy. But anyways, you can still make some money by selling call credit spreads. I am a fan of that strategy right now. So let's see. I'm going to sell call. I'm going to sell 2310. So 2310, pretty out of the money, and it's for 6.3, so June 3rd expiration. There we go. I found it. Okay, 2310. So if I sell this call option right here, 92% chance of profit. Actually, really interesting because the software is basically saying sell at 2310, which is inside the Bollinger Band. So I would technically go outside of the Bollinger Band, but looking at this chance of profit, it's a 92% chance. So actually, I think this makes a lot of sense. I mean, 92% chance, that is really, really unlikely. If you play poker, the chances when you have pocket aces, two aces in your hand, is 82% chance of success. This is 92. Very high, very good. Bid ask is wide, so that's not that good. Volume is not that high. Implied volatility is pretty low, but the delta is only 0.08. So very safe play. And despite these bad bid ask spreads, it still looks like there's some decent premium to be made. If you sell the 505, if I end up buying the 2315, can actually make $90 and only risk 410. So this is about a 23% return. Really good. I'm actually going to place this trade when the market opens up. So that's a really good trade. I do agree with that. Call credit spread on Google looks fine. There's too many trades here, so I'm not going to go through all of them, but looks like Apple's on the list, and actually I have Apple. So if I go back and show you my Apple position, I sold 149, 152 and a half Apple call credit spreads. They're actually expiring this Friday, and the Discord members and I are up $260, about 52% on our position. So 149, 152, and it's recommending 152, 155. I really like that. Looks like this score is pretty decent, and chance earnings beat is high, but if I look at Apple's earnings, when is Apple's earnings? I don't think they're anytime soon. Actually, I have Apple shares, so let's just take a look when Apple has earnings. So long as they don't have earnings, I don't mind selling a call credit spread. Now, if the stock does have earnings, you do not want to sell a call credit spread because this stock could rise a lot. July 26. Okay, cool. So this is a weekly strategy on June 3rd. Okay, so we're good. We're not going to have any issues with Apple. And 152 and a half, 155 is actually even safer than I would go. I went for 149, 152 and a half, but this is for June 3rd. So I would potentially open up this position for June 3rd as well. So I like that. Tesla, I'm not going to mess with. I do not want to sell call credit spreads on Tesla. However, this software has returned really good returns for the past 9 out of 10 years. It's been back tested. So I do believe that selling call credit spreads on Tesla is good. It could probably be profitable, but I am a bit afraid of that. So I'm going to skip over Tesla. Facebook, 202 and a half. And I have Facebook actually as well. So I'm much higher. I'm at 215, 220. That's a little bit more aggressive recommendation. But again, this kind of makes sense because the market's going to open up down again. So futures are down. So one of the factors, which is momentum score, is probably pushing it to be a little bit more aggressive because the market looks like it's likely to keep falling down. NIO's not been rising for a long time. So this makes sense to me. 18.5, 19. All right, so let's move over. Let's go over to covered calls. Tesla. So Tesla, a lot of students have been asking me, should they buy Tesla? For me, it looks like it is a buy score with a grade of A, and that's because this stock has been down from, I mean, it was right around $1,200. And the crazy thing is it's basically half. It's basically a 50% discount. And, you know, there's still high chance of likelihood of them beating earnings. The momentum score is pretty low. But again, the momentum score is low because this stock is in a very bad trajectory. But it looks like the RSI is also very, I mean, low. I mean, I haven't even seen it this low for a very long time. That's because of the current bear market. Now, it says sell 670 call option. Let's take a look at Tesla's current price. And I actually had to sell out a Tesla in one of my portfolios because I have to pay taxes very soon. I filed an extension, but I still have to pay it soon. 620, they're recommending a 670 covered call. 670 would be roughly, would that be roughly 5% out of the money? Let's take a look. Let's go to sell call option. Let's go to June 3rd. 670 strike has a 77% chance of profit. But again, it looks like this algorithm is currently steering towards a bearish market, which does make sense to me. And opening up a covered call position would make sense here. Actually, the break even is 686. Let's take a look at the delta. Delta is 0.33. Very interesting. Not high, not low either. It's kind of in the middle. The theta is really good. 1.56 is basically $156 in terms of profits of this option decaying every single day till June 3rd. And that's only going to get higher. So the theta is very high here, meaning if you're selling a covered call, most likely what's going to happen is Tesla's not going to go up to 670. I mean, there is a chance, there's a 67% chance, but most of the time you're actually going to end up with Tesla going a little bit up, a little bit down, or sideways, whatever. But you're going to make up this premium of $1,625 in a short amount of time. This would be a larger account trade though. So let's move on to something maybe smaller. Looks like Palantir is actually a hold here with sell call at 8.5 strike. And I haven't touched Palantir for a little bit. I have been afraid of touching Palantir. This stock has sold off and I haven't really wanted to touch it. I think we've been in bear market territory, so I don't want to invest in any stocks, to be honest. I would just steer towards call credit spreads for a good amount of time right now until we see some, you know, change in momentum in the market, until we see that stocks are going to go up consistently 3, 4, 5 days in a row without really big drawdowns. Like this pre-market's already going down 1.19%. I'm not going to really touch the stock, but let's see. 8.5 strike would be interesting. So yeah, we have had a lot of resistance at 8.5 because basically this stock has been going sideways. It touches not even 8.5 and then it falls back down. So I do like that covered call. That is a really good play. This makes a lot of sense to me. High probability trade. Debit call spreads. This could be good for, let's see, Microsoft, Baba makes complete sense to me. Alibaba is really oversold in my opinion. I mean, I don't know what's going to happen with China, but with Baba trading for $82, it doesn't even make sense. I think the 52-week low is actually $73, so it does make sense, but really this stock feels really oversold to me. Let's look at some other strategies. Debit put spread. This looks interesting because we're betting on the downside here. Airbnb keeps showing up. I actually watched a documentary of Airbnb, how they are not disrupting the hotel industry because now there's so many regulatory fees and each city has some tariffs on renting out short-term. They don't even let you rent out short-term in many cities in the US. So Airbnb is actually on par with a lot of the hotel industry. I mean, they're not even that much cheaper. And for that reason, buying a put debit spread does make sense for me. Buying call options, Tesla makes sense, Baba. Palantir could also make sense. Now, they're recommending a $7 call option, which is actually slightly in the money. Very interesting. And again, I do talk about buying call options on occasion. I like to focus on selling strategies, specifically like selling weekly strategies. But if you're going to be buying a call option, I prefer you do it with a leap call option. So that way you can capture many quarters of earnings, or at least buy an in-the-money call option if you're very bullish on the stock. So that's cool as well with me. An in-the-money call option on Palantir makes sense. Now, Palantir is a stock that I'm really bullish on in the long term, but in the short term with this bear market, I really just don't know what to do. I don't want to put money to work here because I'm very cautious with me having to pay taxes, and I'm also just really cautious with the overall market in general. I mean, we've seen the NASDAQ fall so much lately, and Palantir is a tech stock as well as a lot of the other tech stocks that I focus on, like Airbnb, Square, Snow, oh my gosh, Coinbase. All the YouTubers recommended this thing at like $300. I'd be super wary of these stocks right now because they're still trading for pretty high price to sales ratios. So again, I want to see more stability in the market. But anyways, there's some good recommendations from the software here. So definitely look into some some of these trades. I do trust my buddy who I used to work with. So again, this software is called OptionsFi. It gives you picks and plays for options on a weekly basis. It uses an AI algorithm and different factors to pick these plays. So pretty interesting stuff. I like some of the ideas out here. So you can check it out in the description. And in terms of my portfolio, you can see some of my plays right here. These are some of the plays that I gave out to my Discord community. So again, if you do want to join that Discord, you can check out the description link as well to book a free call with an option enrollment specialist.